Millions of Americans will be penniless by 2027. Not broke penniless, no savings, no assets, no options. Right now, 64% of Americans are living paycheck to paycheck. 27% have zero emergency savings. 41% of adults are drowning in high-interest debt. And the US dollar has lost 9.1% of its value in the past 12 months alone. This isn't a recession. It's systemic collapse, and it's accelerating. You are not ready for what's coming, because by the time the headlines catch up, it will already be too late. The silent collapse of pensions has already begun, and you're not on the list. $1.4 trillion. That's the current shortfall in state and local government pension funds across America. These are the same pensions millions of workers are depending on to retire with dignity. Except here's the problem: they're not funded. They were never fully funded. And now, with inflation devouring asset values, interest rates decimating bond portfolios, and states like Illinois and Kentucky on the verge of defaulting on their obligations, pensions are becoming a ghost promise. California's CalPERS, they're admitting to only being 71% funded. New Jersey's state pension fund, 59% funded. And that's using optimistic projections, assuming markets go up 7% every year until the end of time. Reality? The S&P 500 adjusted for real inflation is flat. Bonds are getting destroyed. And these pension systems are now quietly begging the Fed for another bailout or else. But here's the kicker. You're not in line for that bailout. The top 1% of recipients, the ones with six-figure pensions, will always get paid first. The union bosses, the connected insiders, the former bureaucrats, everyone else, they'll get IOUs, deferred payments, adjusted benefits. It's already happening. COLA increases, cost of living adjustments, are being canceled or capped in 18 states. Retirees are getting the same checks they got 3 years ago, except their cost of living has gone up 25%. That's a stealth cut. And if inflation continues, and it will, the gap becomes permanent. Think about that. Millions of Americans will enter retirement over the next 2 years with the illusion that they have a secure income. But that income buys less every month, and the system is quietly preparing for means testing and benefit clawbacks. They won't announce it in a press conference. They'll just implement reforms that change the math. In 2027, 85% of retirees will find out their pensions don't stretch. And unlike the rich, they won't have a plan B. They don't have rental income. They don't have offshore holdings. They have that one monthly check. When it collapses or gets eaten by inflation, they collapse with it. It's not loud. It's not dramatic. But it's irreversible. And the worst part? The collapse of pensions won't show up in the headlines. It'll show up in grocery store lines, in missed utility bills, in parents moving in with children. It's already happening. And by 2027, it'll be unavoidable. The housing trap will snap shut in 2027, and millions will be trapped in place. You might think if you own a home, you're safe. Think again. In fact, housing is about to become a financial prison for tens of millions of Americans. Let me show you why. First, interest rates. In 2021, mortgage rates were around 3%. In 2026, they're hovering between 6.5% and 8% depending on your credit. That sounds bad enough. But what happens when you try to sell your home in 2027 and the buyer can only afford half as much house because their mortgage payment is double what yours was? Prices collapse. Already, we're seeing it. In late 2025, home values in Austin dropped 17%. Boise, Idaho, down 21%. This isn't temporary. It's systemic, because the Fed is cornered. They can't cut rates without tanking the dollar. So, housing is frozen. Nobody's buying, nobody's selling. And homeowners? They're stuck. They can't move to find work. They can't downsize. They can't refinance because their low-rate mortgage is a golden handcuff. Meanwhile, property taxes are spiking. Municipalities are desperate for revenue, and they're going after homeowners. In some states, property taxes are rising 12% per year. Insurance premiums are skyrocketing too. Climate-related disasters, fires, floods, hurricanes are now uninsurable in entire zip codes. Florida, home insurance premiums are up 42% in 2 years. And that's if you can even find a policy. Many insurers have just left the state. So now you're stuck in a house that's dropping in value, costs more to insure, and is taxed higher every year. And you can't sell it. Welcome to the housing trap. It's financial serfdom disguised as stability. And for renters, it's even worse. The average rent in America just hit $2,112 per month, up 28% since 2020. And that's national average. In urban cores, it's far worse. NYC median rent is $3,900. LA is $3,400. And wages, not even close. The housing crisis is destroying mobility, trapping people in place, choking economic growth, and setting the stage for a mass default wave when people can't keep up. And when defaults spike, banks lose, lending tightens, jobs vanish, the system chokes itself. All of this hits peak pressure in 2027. And most Americans, they won't escape. They'll be buried under mortgage payments, rent hikes, tax bills, insurance claims, and no one will save them. Housing was supposed to be the American dream. In 2027, it becomes the American nightmare. AI won't take your job, but it will take your paycheck. AI isn't coming. It's already here. And by the time 2027 rolls around, it won't have replaced all jobs, but it will have replaced the value of labor itself. That's worse. Because here's what's actually happening. AI doesn't need to take your entire job. It just needs to take the 30% of your tasks that made you valuable. And when that happens, your employer reassigns, consolidates, or offloads you. The data is already showing it. In 2025, IBM paused hiring for 7,800 roles that could be automated. Goldman Sachs says 300 million jobs worldwide will be affected by generative AI. But here's the twist. They're not firing everyone. They're just lowering pay. If you used to earn $80,000 doing complex data analysis, and now ChatGPT does 70% of the work, you're not irreplaceable anymore. You're worth $40,000. And that's exactly what we're seeing. Wage compression. Job listings offering 25% less than pre-pandemic rates for the same titles. HR departments are flooded with applicants. Why? Because people are desperate. Because AI has flooded the market with fake resumes, overseas workers with access to the same tools, and a race to the bottom for everything not physically tied to location. Writing, design, coding, analytics, it's all getting commoditized. Even middle management. And if you think, I'll just learn to prompt AI better, good luck. The tools themselves are learning, and they don't unionize. They don't sleep. They don't ask for benefits. The result? Wages drop across the board. Freelancers are getting paid half what they earned in 2020. Entry-level jobs are drying up. Remote workers are being replaced with cheaper global talent. And full-time staff? They're getting replaced by fractional workers who are AI-assisted and billed by the hour. Now compound that with inflation, housing costs, food prices. You earn less. You pay more. You're running backwards on a treadmill that's on fire. And by 2027, this dynamic goes mainstream. AI tools are already integrated into Microsoft, Google, Amazon, SAP, Oracle. They're in your workflows whether you like it or not. This isn't about job loss, it's about value loss. You'll still have a job, but it won't buy you anything. You'll be working, but you'll be broke. That's the AI reality no one's prepared for. And it's coming fast. Dollar stores are the canary in the coal mine, and they're dying. You want to know how bad things really are? Don't look at Wall Street. Don't look at the stock market. Look at Dollar General. Look at Family Dollar. Look at the stores where working-class Americans shop when things get tight. Because those stores, they're collapsing. In 2025, Dollar Tree shut down 600 stores and wrote off $1.71 billion in assets. Family Dollar closed 1,000 stores across low-income neighborhoods. Why? Because the customers who rely on them are out of money. That's the truth. We're not talking about people shopping for deals. We're talking about people who literally can't afford Walmart. And now even Dollar Tree is too expensive. Prices went from $1 to $1.25, then $1.50, then $3 and $5 for premium goods. And the customer base? It vanished. Because when you're living on food stamps, disability checks, or part-time wages, you don't adjust your shopping. You stop shopping. That's what's happening. And the stores are reacting. They're shuttering locations, laying off workers, liquidating shelves. In some cities, entire neighborhoods no longer have a single place to buy basic goods. It's a retail collapse driven not by bad business, but by a population that's going broke. And it's spreading. Grocery chains are reporting profit warnings. Discount outlets are shifting inventory away from food and essentials and into cosmetics, clothing, and electronics because it's easier to mark up non-essentials than compete on food. Think about what that means. Even your local dollar store would rather sell candles and Bluetooth speakers than canned beans because the margins are better, and people are buying junk on credit cards while skipping dinner. That's collapse economics. That's what 85% penniless looks like. A society where stores stop selling essentials because no one can afford them. The bottom is falling out, and the corporations know it. That's why they're merging, cutting costs, hoarding cash. They see the numbers. They know that 2027 will be the breaking point, when even the discount economy collapses under the weight of debt, inflation, and mass insolvency. And when that happens, there's no safety net, no rescue package, just shelves going empty, stores going dark, and millions of Americans realizing the economy has quietly left them behind. The silent tax no one can escape. Insurance is becoming financial extortion. There's a bleeding artery in the average American budget that no one talks about until it's too late. Insurance. Health, auto, home, renters, life. It used to be protection. Now it's financial extortion. And in 2026, it became one of the fastest growing expenses in the economy. You want to know what's really bankrupting Americans? It's not avocado toast. It's that home insurance premiums are up 35% year over year, especially in climate risk states like Florida, Texas, California, and parts of the Midwest. In fact, 5 of the top 10 insurers have pulled out of California completely. In Louisiana, good luck even getting a quote. You're now a risk zone if you live near water, hills, wind corridors, forests, or even poor neighborhoods, in other words, most of the country. And auto insurance? Up 19.2% in 2025. The largest annual increase since 1976. Why? Because cars are more expensive to fix, streets are more dangerous, and insurers are hiking premiums just to keep pace with rising payouts. Now add this. Health insurance premiums rose 7.4% in 2025, while out-of-pocket costs exploded 12% due to plan adjustments. Translation? You're paying more to get less. A $500 emergency room visit now costs $1,800 out of pocket, even with insurance. The deductible? It's so high that you're basically uninsured until catastrophe strikes. And for the 43% of Americans working gig jobs or small business contracts, they don't even have employer insurance. They're buying overpriced marketplace plans or just skipping coverage entirely, which means one accident and you're financially destroyed. Insurance has become a paywall on survival, and by 2027, millions will be forced to choose between coverage and groceries. Even renter's insurance, once $8 per month, is now hitting $20 to $40 in many areas due to crime spikes and inflation-adjusted replacement values. If you own nothing, they still make you pay to protect what little you have. It's a tax on poverty. And here's the kicker. Even when you pay, they don't pay you. Payout ratios are shrinking. Claims are being denied at record rates. Investigations drag on for months. It's all legal, and it's all designed to preserve insurer profits while the customer base drowns. So here's what that means for 2027. Even the most financially disciplined households, the ones who did everything right, who budgeted, who saved, who had insurance, will find that insurance is what bankrupts them. It's the stealth killer. It drains you monthly, then abandons you when you need it. And you can't opt out, because society now requires you to be insured to drive, to rent, to own, to survive. It's not a safety net. It's a cage. And the premium is going up again next quarter. The credit system is turning against you. And it's weaponized by algorithms you'll never see. Let me show you a war that's happening in real time, but you're not allowed to see the battlefield. It's the war for your credit score, and by extension, your access to housing, transportation, employment, and even basic utilities. This isn't a conspiracy. It's data-driven discrimination dressed up as risk modeling. In 2026, 47% of Americans saw their credit scores fall, not because they missed payments, but because algorithms adjusted their risk profiles based on zip code, job sector, or even their browser history. Yes, your digital footprint is now part of your creditworthiness. Experian, TransUnion, and Equifax have started using AI-based behavioral modeling to determine lending risk, which means they no longer need you to default to flag you. They just need to think you're likely to. Did you Google how to lower credit card debt? Congratulations, you're a flagged risk now. Even if your FICO is 720, that shadow score used internally by lenders may say you're a liability. And the result? Your APR goes up. Your limit gets reduced. Your auto loan application gets re-evaluated. No explanation. Just a polite email that says, "Unfortunately, we were unable to extend you credit at this time." Meanwhile, the average credit card APR hit 22.83% legal loan sharking. And those introductory 0% offers? Gone. They're being replaced with variable rates that spike if your profile changes. What profile? You'll never know. It's proprietary, it's opaque, and it's destroying people's lives in silence. Now here's the trap. Because of inflation, more people are relying on credit just to stay afloat. 61% of Americans used credit to pay for essentials in 2025. Gas, rent, food, medicine. That's not discretionary spending. That's survival. So they're racking up balances while their credit scores drop, which raises their interest rates, which makes the debt harder to pay off, which drops their score again. It's a debt spiral. And by 2027, it becomes a credit collapse. Tens of millions of Americans will be locked out of car loans, mortgages, even cell phone plans, not because they were reckless, but because the system decided they were risky. And the system is never wrong, because it rewrites its own rules in real time. This is predictive poverty. You're not poor yet, but the algorithm says you will be, so it treats you like you already are. And once you're labeled a credit risk, the financial system shuts its doors. Welcome to 2027, where your economic fate is decided by software you'll never understand, scoring systems you'll never see, and a digital profile you can't control. 85% Penniless isn't just a dollar amount. It's the elimination of access, and credit is the lock on the door. The banks threw away the key. Social Security is being quietly rewritten, right under your feet, and 2027 is the pivot year. People talk about it like it's a vault with their name on it, like it's their money, like it can't be touched. And that belief is exactly why the next phase works, because the system doesn't need to end Social Security to wipe people out. It just needs to redefine what you receive and delay when you receive it, while inflation does the rest. Here's the core math. Social Security is primarily funded by payroll taxes, and the ratio of workers to beneficiaries has been collapsing for decades. In 1960, it was about 5 workers per beneficiary. Today, it's closer to under 3, and it keeps shrinking as boomers retire and birth rates stay low. That means the money coming in can't cover what's going out, especially with healthcare costs rising and disability claims surging. And now we're entering the real danger zone. The trust fund's depletion date gets talked about like a cliff event, but what most people don't understand is what happens before depletion. Political panic, emergency patches, stealth reforms. You'll hear phrases like strengthening the program, protecting retirees, modernizing eligibility. Translation, less money, later. The most likely mechanism isn't some dramatic vote that cuts checks in half overnight. It's a sequence of tiny changes that compound. Raising the full retirement age, adjusting benefit formulas means testing, changing inflation adjustments. And inflation adjustments are the real dagger. Because if your COLA, cost of living adjustment, is tied to an index that undercounts real-life costs, housing, insurance, food, utilities, then every year you fall behind. You become poorer even while your check increases. That's how you create a nation of penniless seniors without ever cutting benefits on paper. And by 2027, the pressure becomes unavoidable because debt interest costs and entitlement spending collide. When the government is already spending obscene amounts servicing debt, every extra dollar to Social Security becomes a fight between voters and bond markets. So the solution becomes the quiet one. Protect current retirees nominally, sacrifice future retirees structurally. People approaching retirement in 2026 to 2027 are in the blast radius, too young to be fully protected politically, too old to rebuild savings. So you get stuck. Delayed eligibility, reduced purchasing power, higher Medicare premiums, and a world where basic living costs are exploding. That's how 85% go penniless. Not because checks stop, but because the checks stop functioning. They become symbolic. And once millions realize Social Security isn't enough to live on, you don't get stability, you get mass dependence, multi-generational households, older Americans re-entering the workforce, and a political system that can't admit the math is broken. That is the 2027 pivot, the year the guarantee turns into a coupon. The collapse of the American paycheck. You'll work full-time and still be broke. Let's break the last illusion still keeping most people asleep. That if you just work hard, you'll be okay. That myth is disintegrating, and it's happening right now in real time. As of January 2026, 64% of working Americans are living paycheck to paycheck. That includes 32.3% of people making over $100,000 per year. Not minimum wage workers, not part-timers, people with salaries that used to represent stability. So what's changed? It's not that Americans stopped working, it's that the paycheck has stopped working. The median household income is around $74,580, but the average cost of living in a mid-sized U.S. city has surpassed $82,000. That's a $7,400 deficit before you even account for taxes, emergencies, or inflation. And the inflation you feel, the real kind, not the Fed's manipulated CPI, is brutal. Gas, rent, insurance, groceries, childcare, they've all increased 30 to 60% since 2020. Meanwhile, wages have only grown about 14.7% over the same period, and that's before taxes. What does that mean? It means every single year your purchasing power erodes. You're working the same job or harder but falling behind. It's not lifestyle creep. It's not irresponsibility. It's the mechanical failure of fiat economics. And now we're seeing the next phase. Wage suppression through AI, offshoring, and corporate consolidation. Companies don't need to fire you to reduce your value. They just freeze your pay, automate your output, or offshore your replacement at 60% cost. And when you ask for a raise, they say no, because they know you won't quit. Why? Because you can't afford to. Because you're trapped by your debt, your location, your kid's school district, your student loans, your healthcare plan. It's wage slavery in a clean, white-collar package. And the trend is accelerating. The Congressional Budget Office projects that inflation-adjusted median wages will remain flat or negative through 2028. That means no catch-up, no rebound, just continued erosion. Now here's the final dagger. As your paycheck weakens, your fixed costs remain constant. Your rent doesn't fall, your debt doesn't shrink, your grocery bill doesn't wait for you to get that promotion. So the squeeze tightens every single month until your savings are gone, your credit cards are maxed, and you're one missed paycheck from homelessness. That's the reality facing tens of millions right now, and by 2027, it will define 85% of the population. A full-time job will no longer mean security. It will mean survival. It will mean exhaustion. And it will mean failure not because you didn't work hard enough, but because the system was designed to reward capital, not labor. This is the new American economy, where you earn in dollars that depreciate, spend in markets that inflate, and try to stay afloat in a system that's quietly programmed you for bankruptcy. The grocery war is about to go. Fully global, and America is not positioned to win it. Most people think poverty happens because someone loses a job. No, poverty happens when food becomes expensive faster than wages can chase it, and then it never comes back down. That's the hidden mechanism behind 85% penniless by 2027. Because once food inflation becomes structural, it eats every budget alive. And the reason it's about to go structural is simple. Global supply chains are shifting away from efficiency and toward geopolitical control, and that changes pricing forever. Here's what most people don't know. Food isn't priced like it was even 5 years ago. It's increasingly priced off energy, fertilizer, shipping insurance, currency volatility, and export restrictions, not just harvest yield. Fertilizer is the silent killer because modern agriculture is basically industrial chemistry, and fertilizer prices track natural gas and global politics. When fertilizer gets expensive, yields drop or food costs rise, and farmers either plant less or raise prices. Now stack that with climate volatility, droughts, floods, heat waves that ruin crops unpredictably, and you get a world where governments prioritize domestic stability over global trade. That means export bans. Countries have been doing this more and more, restricting rice, wheat, sugar, cooking oils. And once governments get comfortable weaponizing food exports, the world stops being one big market and becomes a collection of guarded fortresses. America is not immune because America doesn't just eat what it grows. It imports huge amounts of seafood, fruits, vegetables, coffee, spices, processed ingredients, and even fertilizer inputs. And when global prices spike, we import the spike directly into the American checkout line. That's why the official inflation number can look tame while your grocery bill feels like a mugging, because people don't live inside CPI formulas, they live inside stores. And here's the kicker for 2027. Even if wages rise, food rises faster because commodity pricing is becoming more volatile due to currency shifts and trade realignment. When the dollar weakens, imported food inputs cost more. When shipping insurance rises due to global conflict zones, costs rise. When energy prices rise, refrigeration, trucking, packaging all rise. Food is the ultimate compounding expense because it touches everything. Your health, your productivity, your ability to work, your medical costs when diet quality collapses, and that's what happens when households get squeezed. They downgrade nutrition first. They buy cheaper calories, ultra-processed, shelf-stable, low protein, high sugar, and then chronic disease accelerates, which increases medical spending, which increases debt, which increases poverty. That loop is brutal, and it's hidden because it looks like personal choices when it's actually structural pressure. By 2027, the grocery war isn't just about price, it's about availability, substitution, shrinkflation, and quality collapse. Smaller package sizes, lower quality ingredients, more filler, fewer nutrients. You'll pay more and get less, then pay again later in health costs. That's how a population becomes penniless without any single dramatic event. It's a slow squeeze. Food inflation drains savings disappear, debt rises, health declines, work capacity drops, and suddenly you're not middle class anymore, you're just one bad month away from zero. And when 85% live that way at once, the economy doesn't slow. It changes species. It becomes a survival economy. The digital trap, CBDCs, capital controls, and the final lockdown of your money. This is the mechanism that transforms 85% of Americans from struggling workers into digitally controlled, economically paralyzed subjects. And it's happening with a level of coordination, silence, and speed that should terrify you. I'm talking about central bank digital currencies, CBDCs. They're not science fiction anymore. They're not 5 years away. They're here. In pilot programs, in legal frameworks, in bills quietly moving through Congress under the guise of modernization. The Federal Reserve has been testing its FedNow real-time payment system since 2023. In 2025, it went fully operational for banks and institutions. Now in 2026, it's being quietly tested for consumer use in partnership with selected fintech firms. And by mid-2027, it's expected to roll out broadly as the digital dollar, a programmable, trackable, and fully centralized form of money. That's the public version. Here's what they're not telling you. CBDCs are not money. They're control systems. Programmable currency means your access to funds can be limited based on behavior, location, social score, or misinformation risk. They can expire your money, freeze your account, restrict spending to approved vendors, penalize savings, or even limit withdrawals, all in the name of security, equity, or climate compliance. And once it's live, you won't be able to opt out. The same way you opted into digital ID, vaccine passports, and online banking. Slowly, then suddenly, it becomes mandatory. Physical cash will be declared obsolete. Private banks will become intermediaries, not owners. And your money? It's not yours anymore. It's a conditional allowance, one you receive based on your compliance. Now connect this to everything else we've discussed. When the dollar collapses in value, when inflation surges, when savings are gone and defaults spike, what does the government do? It says, we need a new system, and they'll say the CBDC will protect you, but it's not protection, it's a trap. Because once your only access to money is through a digital wallet on your phone, and that wallet is controlled by the same system that caused this crisis in the first place, you are fully locked in. No escape, no exit. You can't run to gold. You can't buy crypto. You can't leave the country without permission. You're not just broke, you're digitally immobilized. And once 85% of the population is living paycheck to paycheck with no savings in a system where money expires, where credit scores are behavioral profiles, where government debt is monetized daily by printing, then the collapse isn't theoretical. It's personal, and it's permanent. 2027 isn't just the year the economy fails, it's the year freedom fails. Because when you're penniless, you're powerless. And when you're digitally penniless, you don't even have the freedom to fight back. By 2027, 85% of Americans won't just be struggling, they'll be erased financially. No savings, no buying power, no control. Not because they were lazy, not because they didn't work hard, but because they trusted a system that was already burning. And if you're still waiting for a bailout, a rescue plan, or some miracle policy to fix this, you haven't been paying attention. The collapse has already started, and the people who survive it, they're the ones who saw it coming and acted before the exit doors slammed shut. So here's the final question. Are you going to scroll to the next video and pretend this isn't happening? Or are you going to wake up and do something before it's too late? Because 2027 isn't the beginning of the end. It's the end of the illusion.